Welcome to another episode of Phillip Trading Podcast. My name is William. Okay, so today we are going to discuss something about inflation. So the global policy makers around the world are right now looking to tighten the monetary policy to fight the inflation. And US in particular is actually targeting to raise at least 3 to 4 times of their interest rate this year. Okay, so with all these monetary tightening policy around the world, what are the trading opportunities available in the market right now? So what products or which asset class should investors pay attention to? Okay, so let's welcome our speaker today, which is Trent, okay, our senior marketing and dealing executive of Phillip Futures, to share with us, okay, of his own points of view about this topic. So Trent, how have you been?
Yeah, I'm feeling good today. Happy Chinese New Year.
Yeah, happy Chinese New Year. Yeah, very good to hear that. Okay, so let's start our podcast today. So first question here for you, Trent. Can you please briefly explain to us exactly what is happening in the market right now and which economic cycle are we currently in?
Okay. So since the beginning of the year, right, market participants had anticipated that central banks around the world will start increasing interest rate in 2022. However, the ongoing high inflation issue is quite concerning. So that not only will central bank increase interest rate this year, but may even increase faster than expected. So in fact, countries like UK, South Korea, New Zealand, and Brazil all have raised interest rate in 2021, which is last year. So we are currently seeing a trend of global synchronized tightening in monetary policy. Currently, we have passed the 12th stage of the economic cycle, which was caused by the COVID-19 pandemic. We are seeing improving economic data in employment, businesses, and consumer demand. Even though global economies are recovering, some countries like US, Euro, Japan are still cautious in their monetary policy tightening, but is expected to accelerate in 2022.
Okay. So basically, I think some countries in Southeast Asia is starting to do that. So the spotlight will definitely be the US. When is US going to start to increase the rates? Okay. Now, second question here is that since the start of 2022, right, US indexes, all the three major US indexes were under pressure due to concerns on monetary tightening policy by the Federal Reserve, and also another concern is the very steep rising of the Treasury yield curve. Okay. However, US indexes recently has shown sign of recovery. Okay, a bit sign of recovery. Do you think this recovery is just a rebound for more further downside, or is a reversal, which means it's kind of like a rock bottom on the US indexes?
Okay, so in my opinion, right, the rebound in US indices, I think will be short-lived, and the downtrend is likely to continue until the inflation in US is contained. So there are two reasons actually. One, there could be a potential slowdown in the US economy, and second will be the prospect of other investment like bonds will become more attractive to investors due to the higher yield. Okay, so in fact, the S&P 500 index had already down 9% since the beginning of the year. So when the Federal Reserve raises its benchmark interest rate, banks and lenders tend to raise borrowing costs. Then mortgages, credit cards, and other debt become more pricier and reducing consumer spending and demand. So, and then businesses will also pay more to finance the operations. So broadly speaking, that this will dampen the outlook for company profits and reduces investor enthusiasm for buying their stock. So this is the main reason why I forecast S&P 500 index will continue to slide further until inflation is contained.
Okay, so you reckon there is more downside to it? Okay.
Yep.
Next question here. What about we talk about indexes market. What about the stocks market? Is this the time for traders to really reposition into the stock market right now? If yes, which sector should the investor focus to benefit from the interest rate era?
Yeah, actually there are some sectors. I mean, even though the S&P 500 is expected to drop, there are some sectors will also benefit from the interest rate hikes. One sector that tends to benefit from the most is the financial industry. companies like banks, brokerages, mortgage companies, and also insurance companies, earning often rise as interest rate move higher because they can charge more for lending out their money. Hence, investor can look to invest on stocks like JP Morgan, Bank of America, and also Wells Fargo. Currently, Bank of America and Wells Fargo are trading near its yearly high and may potentially experience a breakout higher if we see if the Fed's raise interest rate or inflation recorded higher. On the other hand, JP Morgan is experiencing a rebound from its crash due to poor quarterly result last month. So all in all, trading opportunities are looking good in the financial sectors.
Okay. So but in short, I think to just summarize, banking is definitely one of the sectors investors should put in their portfolio. Okay. So other than the products that you just mentioned, right, just now, is there any other asset class that investors should pay attention to benefit from this interest rate hike era?
So investors also can look to long, the most direct play in rising rising interest rate environment is investors also can look to long the US Treasury yield market or short the US Treasury notes market. So in high inflation environment, interest rate tends to rise, causing bond prices to drop. Then apart from that, investors could also look to short the gold market. So with the Federal Reserve committed to increase interest rate this year, so we're likely to see bond yields become more attractive to investors as compared to the non-interest bearing precious metal.
Okay. So in short, the three markets that investors should look at is the treasury yield market, the treasury notes market, and probably the gold market. Okay, thanks for your sharing today, Trent. So once again, if you guys are interested to find out how to trade all the products that we just mentioned, such as the treasury yield, the gold, the stock CFD, on the banking CFD, feel free to drop us a message via Facebook, and one of our representatives will contact you as soon as possible. Okay, thank you again, Trent. I guess I will see you next round.
See you. Bye.
Bye-bye.